Woohoo! Go Rivian, go! Pretty excited on the trade and how it's been acting all of a sudden. It's been great. It rallied a couple of bucks. For those of you who haven't been watching, my name is Adam Khan, and this is my half-ass channel. And I've been talking about selling options on Rivian, whether it's calls or puts or whichever. The stock kept drifting lower, which wasn't so much fun because I kept getting longer and longer the stock. It now started looking like, I mean, I don't want to predict the future, but started to go the other direction. It got down below 13. It closed this week above 15, which doesn't sound like a lot, but percentage wise, that's a decent move. And for the options, now I got taken on a few of the calls and actually sold some puts again. So it's kind of nice and it starts building exactly what I'm hoping. It's little nickels and dimes. It's not a ton of money, and I'm not trading it ultra large. But what ends up happening is percentage return on investment. I find if I just stick with the strategy, it pays off pretty well in the end. You know, you collect an awful lot of extra premium and options that a stock doesn't have with it. You've got things like time decay and volatility built in. Now, the volatility, to be fair, if the professionals are doing their job well, it should be pretty accurate to how much the stock moves. But you do pick up the time decay, and every day that you're short the options, you kind of get paid a little bit to have that position on. I don't go out of my comfort zone as to how many shares I could end up having on at one time. And I just try to stick with it. I do the weekly options because I think they have the most what I'll call juice in them because the time decay seems to fall off quicker. I did recently sell a couple of later dated options as well, which isn't typical for me. But a little of what went through my head is if I could get paid this, I'll think of it as a dividend. I want to say if I'd have to look again. I sold like January's 30 call. Well, if the stock gets to 30 and I sell 100 shares, well, great. I probably doubled what I paid for it. And in the meantime, I picked up a 3, 4, 5% dividend to be able to sell that call. And I don't plan to sell out all the stock. I plan to hold some of it. So I don't sell all the calls against the entire position I have. So if I get taken at 30, well, great. I should be thrilled that I still have some shares on. The only risk that I see is like something that would cause it to gap higher or gap lower at this point. And if it does, it does, and I just adjust with the trade. So those of you who've been watching, I hope you think it's cool. I'm not a financial planner. I'm not an accountant. I'm not a lawyer. Please use the information on my channel for entertainment purposes only and reach out to your financial planner, your accountant, or your lawyer for your financial decisions. And I've said it before, especially on this trade, this is a small percentage of what I invest. I would hate for somebody to see this and take on big risk that they shouldn't be taking. My underlying is I always try to put away and more than what I live on. Whatever I live on, I try to make a little bit extra and put that into the markets, whatever market that is. You know, the interesting thing is recently, and this is why I say, please, don't follow my advice and take a bunch of risk. I bought CDs at 5.25%. Well, I don't typically own CDs, but the markets have been volatile enough, and when I saw 5.25%, I was fine taking it. Now, I only did 3 month CDs. I didn't do anything extended out just because I know who I am and I don't like tying up funds that long because if I see something I do want to put it in, I don't want to be stuck in the CD or take a loss on it um, like the banks did. I mean, quite honestly, I don't see rates going a whole lot higher. In my opinion, which is worth nothing, I kind of feel like we've run our course on what rates are going to go to. But if they went to 8 or 9 or 10% and I owned a 5% CD, well, that's a big loss in my mind. Kind of the reason the banks didn't see it as a huge issue is really if you hold it till maturity, you get your money back and whatever dividend or rate of return you were getting. It's only if you're forced to sell it beforehand. Well, in 3 months, I'm not real worried about being forced to sell anything or see something that comes along that I just can't wait another month or so. So I stick with short-term CDs because to get the extra 15 basis points or 20 basis points to be waiting a year or two just doesn't make sense to me. Now I might miss out if rates go back down and I can no longer get 5.25. but that's okay with me. I like to have access to the funds. So anyway, those of you watching, like, subscribe, say hello, chime in, make your comments, tell me why I'm wrong. Happy to argue anything. I don't take it personally. I was a trader on the floor of the exchange in Chicago for a long time. I actually posted some of the videos of the NASDAQ market. And I might do more of that, especially like 5:30 in the morning when numbers come out. It gets pretty wild. And what you end up seeing, yeah, I wish the banks couldn't be market makers anymore. So partially that's what I did for a living. So I hate seeing them take over the market. But if you watch at like 5:29 or 5:29 and 30 seconds, I think they stop making bids and offers because they just make their little bits and constantly make the market. And what I think you're left at, now I don't know this, you see the market really widen out all of a sudden, 30 seconds or so before an economic number comes out. I think that's just individual people willing to take on the risk of what their guess is. And as a trader, I really respect that they take on risk and they're really willing to lose money. The banks get out of the market because they're waiting for the news to come out and they don't want to take on that risk. And then over the next 30 seconds to a minute after the number comes out, you often see the market just go all over the place, up and down here and that. Be super hard to trade until they have time, whether it's their AI or their traders or whatever it is, to determine where exactly they think the market is. And then you see them come in and kind of swoop up any of those people taking on that risk and pick up those trades, and you see the markets kind of take a direction. Now, it doesn't happen that way every time, but it's really fun to watch the market fly around like that. And again, I wish the banks and the others who know or have good insight as to where the market's really going to be afterwards. I don't know. I think it's a bit of an unfair advantage in some ways. And I don't think their computer system should be allowed to trade like that. I think a person should have to be putting in the orders. But just my own, again, that's just my opinion. And I felt that like I loved it on the floor because it was open and you could see what was going on and what the banks were doing. Anyway, this was about the Rivian trade. If anybody ever wants to talk markets and what it was like on the floor and stuff, I love all that stuff. So have a great weekend. I hope you guys chime in.